Welcome, deep feeders. You're watching a recap of the Asian session. Japanese, Australian, and the New Zealand stock indexes moved higher on Tuesday morning, following improved risk appetite. In Australia, stocks have been rising for the fourth day in a row. They have already advanced to a three-week high. And in New Zealand, stocks closed at the almost six-week high. Optimism in the Asia-Pacific region was mainly fueled by the news from China. Yesterday, we mentioned that Alibaba, a company listed in New York and Hong Kong, announced a split into six business units. It will assume a holding company structure. Each unit will have its own CEO and board of directors, as well as an opportunity for listing. With this decision, Jack Ma is trying to achieve several goals. First and foremost, he intends to come to terms with the Chinese government, which holds an iron grip on the tech sector. If he succeeds, it will significantly improve sentiment. Investors have been waiting for any shifts in their direction for many years, as they have also been affected by strict control over the tech sector. By restructuring his business, Jack Ma may also avoid the listing on the New York Stock Exchange. After the release of this news, the shares of China's online giant Alibaba soared by 16%. Its market cap jumped by another $30 billion. Risk appetite also increased following the speech of China's Prime Li Qiang. He said that the economic recovery is gaining momentum. In March, the country is likely to reveal better results, thus in the first 2 months of the year. However, the positive news on China's tech sector may be eclipsed by soaring relations between the United States and China. Apart from that, the risk of a banking crisis is still relevant. However, the Fed assured speculators that everything is under control, adding that the banking system remains resilient and on a solid foundation. The recent collapse of several US banks was solely due to mismanagement. Market fears have eased amid such statements. It boosted the risk on sentiment. Now traders are again mainly focused on the Fed's key rate decision. Jerome Powell said in early March that the regulator would stick to aggressive tightening. Speaking before the Senate this week, Fed Vice Chair for Supervision Michael S. Barr noted that the rate decision will depend on incoming reports. So market tension could mount significantly ahead of the PCE, which is on a tap on Friday. Most central banks prefer to remain committed to an ultra-hawkish stance and that they fear that inflation may accelerate again if they stop raising rates. During the economic crisis of 1981, the Fed had to hike the rate to the historical peak of 15.8% to tame soaring inflation. Back then, inflation jumped to double digit, reaching 20%, and now consumer prices remain at lower levels, but they are still too far from the 2% target. Therefore, regulators are unlikely to abandon aggressive tightening. In turn, it may lead to an increase in the dollar-denominated debts. The situation seems to be getting worse. We urgently need faster and more efficient global mechanisms for providing debt treatments to vulnerable countries, IMF Chief KRISTALINA Georgieva said. Her comments renewed fears over the banking sector that had somewhat abated. However, the majority of traders still believe that the Fed will leave the benchmark rate unchanged in May. Therefore, the US currency was rather volatile in the morning. In the Asian session, the US dollar index shed losses amid a slight recovery in the yields of Treasury notes. And a mixed dynamic in markets. Its price rolled back to 103 versus its main rivals. Overall, it reached 120.50, and the expectations of a policy reversal by the Fed will continue to exert pressure on the greenback in the short term. At the same time, persistently high inflation, a strong economy, and the hawkish statements by Fed officials may stimulate its upward movement. It means that revised GDP figures and the CPI may significantly impact its trajectory. In the case of a positive data, the US dollar will regain the upper hand, rising to the resistance levels of 103.40 and 104. If the reports are downbeat, the US currency could fall to 101.90, a monthly low of March 23. There is even a chance of a decline to 100.8, the low of February 2. The yen is also trading in a wide range. The fiscal year in Japan ends on March 31. As Japanese companies are converting their profits from the dollars to the national currency, the yen is steadily rising. The dollar-yen pair has already slipped to the range of 132.10 and 132.90. However, talks about Japan's credit rating and the cautious optimism of the Fed's policymakers pushed the pair to the level of 132.40. Geopolitical concerns related to Russia, North Korea, and China are supporting the yen as a safe haven asset. Today's statements by the Prime Minister of Japan also facilitated its further growth. Fumio Kishida spoke in favor of a raise in wages, which contradicts the Bank of Japan's ultra-soft policy, and the peers managed to regain control. Commodity currencies appreciated in the morning amid the weak US dollar and the rising US stock indexes. The Australian dollar touched 0.6731 during the Asian session, moving in the range of 0.6661 and 0.6719. Although it was rather volatile, it managed to retain an upward movement. At the same time, the Aussie ignored internal factors which should have pushed it down. The Reserve Bank of Australia meeting will be held in a few days on April 4. The regulator is widely expected to take a pause in the tightening cycle. Traders are betting on such a scenario after analyzing the latest data, which showed a decrease in inflation for the second month in a row. The Reserve Bank of New Zealand remains the only regulator in the region that still plans to raise the interest rate. Annual inflation in New Zealand may approach a three-decade high of 7.2%. Therefore, there is no doubt that the watchdog will hike the key rate on April 5. The Kiwi dollar pair grew to 0.6246 amid such expectations, and the Kiwi was moving in the bullish price corridor of 0.6203 and 0.6251 during the Asian session. And that's all for now. Subscribe to our channel and stay up to date with the latest market news with us. See you soon.